the consumer goods sector has remained a key driver of the performance at the Nigerian equities market, posting strong gains despite weakness across select blue-chip names. Well, Adeyemi Adenuga, investment research analyst at Zedcrest, joins me now for more on this discussion. Adeyemi, thank you so much for joining us on the show today. Let's walk through the highlights of the first half of this year, especially for the consumer goods sector, the overall looking at the equities market. What were the biggest takeaways for you? And in terms of notable stock movements, which caught your interest?
Okay, thank you for having me. So for the consumer goods sector, earlier this year, we saw significant improvements across major tickers. So say, for instance, Nigerian breweries, we saw improvements in their performance, moving from a negative performance in 2024 to a positive performance in Q1 2025. This improved performance across various tickers was largely due to improved cost controls. I mean, we see a lot of tickers bringing different mechanisms to manage their costs. And then in addition to that, we also saw the FX stability also print into their performance. So all these caused like a positive performance for players in the consumer goods sector. I mean, looking at other sectors, looking at the banking sector, as we saw improvements in the performance in Q1, primarily focused on improved cost management by banks, despite the decline that we saw in windfall taxes, and then also the declines that we saw in terms of unrealized FX gains for banks. So all this, despite all this, we still saw positive performance for banks in Q1 2025. Moving to other sectors, I mean, the oil and gas sector also saw positive performance, where we saw companies like Seplat, Total post gains in the market. So all these were major factors. And as I said earlier, a major thing that contributed to the performance of various tickers on the exchange was the nature of the foreign exchange market in Q1 2025, which also printed to the cost margin for some of consumer goods players.
Yes, and on the back of the FX stability, we are seeing too many businesses also return to profitability. But now inflation still largely remains sticky at this point in time, where we are expecting the easing to continue. And then, well, the response of the Monetary Policy Committee to still hold a tight stance at this moment. How much more do you think the consumer sector can take at this moment when we're talking about hits from inflation and an FX volatility? What does the next half of this year look like for you, and how are investors also selecting their choices?
Okay, so I mean, for the next half of this year, we expect to see the inflation print affects the market, but not very significantly. So what we expect to see is that, I mean, as you understand that inflation is a measure of the movement of commodities, not like the inflation figure is what determines the prices of those commodities. So we see that players in the consumer sector are already engaging in different activities to reduce their cost structure. So we've seen backward integrations from players like Nigerian breweries, Unilever, and then we also see situations whereby some of these companies partner with farmers and people that are on the same value chain with them, just to improve their ways whereby they get inputs into their factory and get their production process going further. Moving to the second half of this year, a major part of the driver for the second part of this year would be cost management for majority of these tickers. In addition to that, I mean, investors will begin to favor fundamentally sound tickers. I mean, if we look at the likes of Beyond MB, Boa Foods, Unilever, and then some other players in other sector, MTN. Currently, we see MTN cross the 300 Naira benchmark per share. And then if we look at other tickers, even in the banking sector, GTCO, Access, and the likes. So we expect that investors will continue to favor fundamentally sound tickers, and then that would pause buying interest in the equity markets in the later half of this year.
Yes, most definitely. Investors are really keeping their fingers crossed and also positioning ahead of the release of the full year, half-year numbers. But wrapping up the conversation now, in terms of your recommendations, buy, hold, sell, what's your word to investors?
Okay, so I mean, for recommendations across our major coverage companies, which includes Boa Foods, Nigerian breweries, Unilever, Nestle. So we have a recommendation to buy some of these stocks, and then for other stocks, we do not have any set recommendations on any company at the moment, and it is largely because of the expected performance that we see, as I've said earlier, in terms of sectoral performance for this sector and also for other sectors, banking sector, consumer goods sector, industrial sector, and also the telecommunications sector.
Well, Adeyemi, we'll leave the conversation here for now. Thank you so much for your time on the show today. That was Adeyemi Adenuga, Investment Research Analyst at Zedcrest.